The last time the stock market did this, it did not end well. Stocks went down for multiple months. So is that same thing happening here? I think we have a little bit of a clue, which is the low of the day today, which is at roughly 517. This is very important because we've already talked about a couple of warning signs the S&P and the market have given us. NVD with a full candle, the S&P with 4 full daily candles, and now we have that 1% drop down to a weekly lower low, or we're starting to see some evidence, again, keyword here being evidence, that a crash might be here. So it's spooky. It sounds really scary, but we're going to go through and get you prepared for today. So what's really interesting here is that we've been talking about that ever since the low we formed in October. We've only gone down once. One time we had a weekly lower low. Well, the same thing happened here. So if this time's going to be different and it's not going to end well, we want to be very aware that this means we're losing momentum. And if we lose momentum, support is not found on this chart until we get down here to about 495. There is that monthly area at about 505, which we will discuss on today's show. So what I really want to do is just tell you that we went through and talked about this on the weekend. Now we're getting evidence. But the reason why this is so important is because we got through some light data so far, but it's largely red, right? Red's not good. We want a strong economy for a strong stock market. And then tomorrow we get a big doozy. We get Jerome Powell speaking with an economic outlook. And then on Friday, we're going to have an average hourly earnings number, which is expected to come in quite hot. So I'm going to tell you at the end of the video exactly what scenarios I'm looking for, because now we have something on the chart called a fail, right? We've actually printed a lower low. But as of right now, it's a failed breakdown because we've recaptured last week's low at 518.4. If we do hold that, hey, we survived the stock market crash of 2023 and we go right back up higher. If we didn't, though, it likely means we're going to close with another weekly lower low and make progress down closer to 504. Let me just show you one more thing before we go further here. So if we're looking for a very easy pattern or something that tells us that the trend is changing, let's look to here. Low, lower low, lower low, lower low. Okay, that looked like it was a good area for us to get out. Low, dead cat bounce low, lower. Yes, one low is not a pattern. We need multiple candles to form a trend change or a set of lower highs, a set of lower lows, which happens right here. Short-term corrective wave, and ever since it broke, we've been going higher. Let's go back to one more example here. What do we got? All right, we got high, lower high, lower high, low, lower low, lower low. What was that? That was the all-time high. That was the start of the bear market. So until we see that happen here, we're going to need to see not just evidence, we're going to have to see confirmation. So I'm giving you a warning because it's now not just one, it's 2 out of 22 weeks, which have lower lows. The last time we did not form that continuation, which means we just went up. If that's going to continue for this week, it's going to be very easy. So stay tuned. I got you. We're also going to go through and talk about a quote at the end of the stream, which is one from Bruce Lee, where if you're feeling yourself getting all hung up on your emotions, you're probably not alone. And I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. We're down by 9 points since yesterday. 72 greed yesterday. Now we're down here to 63. So what you want to do is if you're feeling emotional, you want to empty your mind and be like water, which means we want to focus on levels. It's something we really talk about on this channel. We also talked about how we're currently in a green light or pedal to the metal for the annual 2024, but we're currently in a yellow light. Yellow means caution. It does not mean stop. It does not mean it's time to run. So that 504 area signifies a monthly lower low. And that's exactly what we're looking for our next major support area, as we're starting to see evidence our dailies and weeklies are starting to break. All right, so there we go. Let's push forward. Fear and greed, talked about that. The other thing I really noticed is that these other warning signs, I might not have time to get to this one today, but the 10-year note is starting to break higher. I did talk about that on the weekend. Dollar's also shaking up and going higher, and volatility is up like 6%. The one I want to focus on right now was going to be the Apple and Tesla that are currently oversold. And the reason why is because, man, Tesla looks like it just sucks. It's down by 5% today. And on the year, I don't even know how much it's down. 33.37%. It's lost a third of its value. Apple's also down by 10. On the day, Apple is red. It can't really shake things off. So why does this matter? Well, because the Magnificent Seven are starting to fracture, where some of them are actually falling and not doing so good. So if we think about the article that drove Tesla lower today, it's that Tesla misses by the most ever in brutal blow to EV, the biggest drop since 2020. Yikes, right? First year-over-year drop since 2020. Uh-oh, right? The most ever in brutal blow to EVs. Well, that's today's article that took it down. What's the article from a couple of days ago? This is only from March 28th. It's like less than a week old. Electric cars pass the tipping point to mass adoption in 31 countries. So good news does not make Tesla go up, but bad news makes it go down. Let's quickly look at that chart there because I'm actually quite surprised that it's not bouncing here. If we look at a daily chart for Tesla, what do we know? Well, it's pointing down. That's what the megaphone shows us here, right? The channel. So we got these lines that point down. And every previous time, Tesla has bounced off here. Bounce, bounce, bounce. It's testing it again. But it also showed us some weakness because it's also been testing the top, the top, the top, the top. This time it did not. It basically came in for a gap fill, and the bears said, nope, do not pass go, do not collect $200, and went right back down to the lower part of the channel. So on this bounce, if we don't even get over the 50, this stock is rolling over. And if we breach that 145 and a final gap fill here from the big bulls, man, this is probably going to drag. Tesla is not the only game in town, but it's definitely something we want to pay attention to. So we talked about that one here. And then I also want to talk about Bitcoin because this one here has just been on a waterfall lately. So this is where I want you to empty your mind, be formless, shapeless, like water. If you put water in a cup, it becomes a cup. You put water in a bottle, it becomes the bottle. You put it in a teapot, it becomes the teapot. Now, water can flow or it can crash, right? Just like the market, it can flow or it can crash. So if we look here to the S&P on the weekly, man, it's flowing, right? Hairs down long. And 1 out of 22 weeks, that's it. That's all these bears got. But now the evidence, again, keyword here being evidence on the daily chart, is starting to stack up. We talked about this channel breaking down bearish before over here. Well, that same thing's happening. And I want to leave you with that clue I talked about at the end here. So if we think about Bitcoin as a leading indicator, I want to show you one more pattern here because you stay tuned all the way till the end. I want to give you a thank you. So I was noticing this head and shoulders pattern here for Bitcoin. It started to flag out over it, and then it just dropped off. So that's the staircase up and the elevator down. If I look here objectively at the S&P, it's not that I want to see this. I'm going to lose money if this pattern plays out. It's that I want to look for what is actually there, not what I want to see. So if I look at this in hindsight and I delete it, I could see the same thing forming here. We got a shoulder, we got a head, we could form a shoulder. So if we're unable to bounce here and it plays out something like this, we lose that 50 MA. That's a head and shoulders. Bitcoin's still a leading indicator. We're probably going to make progress down towards that 4% or maybe even the 8%. That's what I would be looking for. And the reason why this matters is because if we look here to where we currently are, there's a big old gap on the chart. So this gap means that if gap downs are for buying, we should fill the gap. We should print that weekly higher low, and we should just advance from here. If we fail to do that, it means that we're starting to see not just evidence, but confirmation the bears are starting to capture a little bit more momentum. If you want more evidence or more information, the weekend deep dive's now here on the left-hand side. If not, subscribe on the right and hang out with me at 9:15 a.m. tomorrow. Thank you very much.